How's it going, YouTube? Welcome back to another video here on the House Money Investing channel. In this video, I'll just be going over a few stock picks that I had for today, a few stocks that I looked at. The first stock here is going to be CE, which is a play in the materials industry to kind of give you exposure to materials. They're in the provision of technology and specialty materials and stuff like that. So this will kind of give you a, if you're not already into materials, it'll give you that. And their actual EPS has been growing the last 3 quarters, quarter 1, 2, and 3, as well as it's labeled as a 61% buy as well. The share price over the last 5 years has been up 88%. They also have a nice dividend yield at 1.89, pretty high PE ratio at 27.17. So this here is, it's at 131. I can see it getting back up to 138. So I'm not going to go too much into detail on these stocks, but just show you guys the ticker, give you a little brief overview, and then you guys can do your own due diligence. But these are some of the stocks that I'll be getting into next month. Then we got EMN, which is Eastman Chemical. This here over the past 5 years is up 42%, has a dividend yield of 2.58 and a PE ratio of 29.63, and a market cap of a little over $13 billion. And this is a great buy as well. And their actual EPS they did pretty good last quarter. They beat expectations pretty well. And these people they deal with specialty chemicals, vent materials, stuff like that, and fibers. Their chemicals are products for like transportation, consumables, building, construction, animal nutrition, crop protection, energy, personal and home care, and stuff like that. So this would be another great buy here, and it kind of give you exposure to that segment as well. Then we have NIU, which this will be another play that I'm going to swing trade next month. This one's on a run up as well. It just IPO'd back in 2018, so it's still fairly new, but it is up like 245%. It came out at like $8.50. This does not pay a dividend. It's pretty small with almost a $2 billion market cap and an extremely high PE ratio of 89. Their actual earnings have been down, of course, due to the pandemic. But this is basically a Chinese holding company which does urban mobilized solutions and stuff like that. It's basically a battery play on e-scooters, and it's in Beijing, China. So, of course, batteries are hot right now. EVs are hot. So any type of exposure you can get into that segment is probably going to be a nice play. And of course, you got your Nios, your Teslas, your Plug Powers, ChargePoint, which is SBE, which is going to merge. So this is just another one to look out for, to add into your portfolio in that sector, which should have a great growth. And like I said, since the IPO in 2018, it's been doing great. The next one is Biogen. This thing has been beaten down severely, so this is going to be a nice value play, and it's got a PE ratio of 7.99, and it's a $37 billion market cap. Some analysts, a lot of them say to hold it, some buy, very few say sell. But looking at the EPS, this company is doing well over the last 4 quarters. So in my opinion, it's a nice play. And they basically do like developing therapeutics for like diseases and stuff like that. So this is just a health play in the health industry, and with the vaccinations and stuff like that about to hit the market, this is a company I also see, making a large profit and growing off the vaccination play. And you can never go wrong with healthcare, because everybody gets sick, everybody wants to be healthy, and the richest of the rich, they're going to pay whatever they can to stay alive. So basically, that's a good play as well. Then we got good old Nike. Of course, anybody should know what Nike is. Nike is it's not one of my favorite stocks, but it is one of my favorite brands, and it's a great company. And this company's up over 100% in the past 5 years. Me personally, I'm up 23% on this position myself. I do own several different fractional shares of Nike in several different brokerages. And of course, Nike is a huge company. It has like a $215 billion market cap. And it does pay a small dividend. Of course, most analysts will tell you to buy this one. Nike is over there in China, right? So China, their economies come back quicker than the U.S. because things are getting better. So internationally, Nike is going to be able to make their sales again, and with that, they're going to profit. Their EPS in quarter 2 and 3 of last year were great. Quarter 4 was down, of course, and then quarter 1 was right back up. We'll see how quarter 2 goes. I'm pretty sure they'll do fairly well. I still personally buy a lot of Nike myself. And we all know what Nike does. They make shoes, clothes, a lot of merchandise, stuff like that, sports gears, all kinds of different things. So that's definitely a great play. And those will be my 5 stocks that I have on lookout at the moment. And I'll get back to you guys with another video. I'll do about 21 trades tonight. I'll be pulling out some principal and locking in some gains. My next video after that, I'll probably go over my Charles Swap account. Then I still have to do my Ameritrade, Fidelity, Vanguard, and M1 Finance accounts. I've already went over my Robinhood, Webull, Stash, Acorns, Cash App, and Public accounts. And I just dropped a brief video on my Moomoo account. Of course, I'll bring you guys in tomorrow on some more stock picks that I have for January. Currently, my watch list. Let's see how many stocks I currently have on my watch list here. So 1 second. These are all the ones that I already have fractionals in. This is all house money here. I'm scrolling through, so as you can see, I have a lot of plays. So I have 349 stocks on my watch list to buy next month in January, and I will be adding to that watch list for the rest of this month. So of course, I'll still go over that with you guys, and as well as like stock news and stuff like that. And that'll be it for the video.